I think people need to keep their eyes on Q3 and Q4 as it regards these ETFs, right? We saw the Bitcoin ETF explode out of the gate in January. We saw flows slow down a little bit in Q2, although they're still coming in. We saw the Ethereum ETF launch. But I think the big story in the second half of the year is we're going to see flows re-accelerate. And the reason for that is I expect the major wirehouses, Morgan Stanley, Wells Fargo, UBS, Merrill Lynch, to all come online in late Q3 or early Q4. And that's going to unlock trillions of dollars of assets that are going to come running into this space. I think it's going to be a big deal.
A few days ago, during a conversation with popular Bitcoin YouTuber Scott Melker, Bitwise CIO Matt Hougan predicted that trillions of dollars was about to flow into the cryptocurrency market through the spot Bitcoin and Ethereum ETFs. Matt explained that these massive inflows would begin as soon as Wall Street giants like Morgan Stanley, Wells Fargo, Merrill Lynch, and UBS approve the spot Bitcoin ETFs on their platforms, stressing that only one announcement was needed to open the floodgates. That first announcement came on Friday, with Morgan Stanley becoming the first major bank to approve spot Bitcoin ETFs for solicited sale to clients. According to reports, the global investment bank told its army of financial advisors that it will soon allow them to offer Bitcoin ETFs to clients. Morgan Stanley has around 15,000 financial advisors, and starting August 7th, they can solicit eligible clients to purchase shares of two exchange-traded Bitcoin funds: BlackRock's iShares, Bitcoin Trust, and Fidelity's Wise Origin Bitcoin Fund. According to people familiar with the policy, eligible clients in this case refer to clients with a net worth of at least $1.5 million, a high risk tolerance, and a desire for speculative investments. Regardless of this initial cautious approach, this is a huge development for the entire cryptocurrency space, as it shows the growing acceptance of Bitcoin and other cryptocurrencies in mainstream finance. Experts believe Morgan Stanley's announcement will trigger similar announcements from other major banks like Goldman Sachs, JP Morgan, Bank of America, and Wells Fargo, which are still prohibiting their advisors from pitching Bitcoin to clients. When this happens, the Bitwise CIO easily sees tens of trillions of dollars flooding into the cryptocurrency space in the coming months. Matt recently addressed a crowd of Bitcoin investors at the Bitcoin 2024 conference alongside VanEck's Jan VanEck, Robert Mitchnick from BlackRock, and Bloomberg ETF analyst James Seifert. As we bring you clips from the fireside chat about ETFs, crypto-based ETFs, and how they are going completely mainstream, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
We recognized that this was a critical technology and that ETFs would be well received by the market. If Bitcoin's going to achieve its long-term objective, it needs to be owned by a wide variety of people. Some people want to self-custody it. That's great. Other people will want exposure through an ETF. And we thought it was possible, and that turned out to be right. I just wanted to add one fun piece of ETF history, because many people maybe are new to ETFs. But 20 years ago, when Jan and I were doing ETFs, they were the renegade idea. The Financial Times called them weapons of mass destruction. There were congressional hearings about ETFs destroying the American dream, and people generally hated them. Fast forward to today, there's 7, 8, 9, 10 trillion dollars in ETFs, and they've been accepted in mainstream. And I sort of saw that transformation from a disruptive idea that people didn't trust to something that's embraced for what it can do. And I think, you see that same thing going on with Bitcoin right now.
Yeah, I mean, I think it's overwhelming, really. I mean, congrats to BlackRock for raising so much assets and the success. As I said yesterday, one of the biggest ETF launches in history, if not the one. And what's interesting to me is how big the assets in Bitcoin ETFs are now relative to the ecosystem, right? Coming up on 60 billion relative to a $1.5 trillion asset, let's call it ballpark. There's only double that amount in gold bullion ETFs, and gold bullion is worth about 15 trillion in market cap, so 10 times as big. So the impact is starting to become a little bit of a whale in the Bitcoin ecosystem.
Robbie, is it a passing fad? What do you guys think is going on over at BlackRock?
Well, I think what's interesting, James, is that we're still pretty early in the rollout of these, right? It's only been 6 months. Yes, the flows have been tremendous, but when you think about the client segments, iShares and similar for VanEck and Bitwise that we serve, it really breaks down into end investors, direct, wealth advisory, and institutional. And that first segment, from day one, came kind of storming out of the gates. There was huge demand, and that drove a lot of the flows. But in the other two segments, it's still quite early in their journey. When we talk about institutions, there's a long research, diligence, exploration process that requires a lot of education. We're on that journey with a lot of our institutional clients today. The wealth advisory space, the RIA channel, which is a subset of it, turned these on quickly. But when you think about the big wirehouses and private bank platforms, none of them have really opened them up to their advisors yet. Typically, that takes multiple years, and they're actually, in many cases, expediting those processes in light of what tremendous success there's been, but none of them have actually turned it on yet.
Matt's latest CIO memo to Bitwise clients is titled, "We are not bullish enough, the big takeaway from the 2024 Bitcoin conference." He begins by discussing the growing interest in Bitcoin and crypto among US politicians, remarking that everyone would have thought this completely impossible just 2 years ago. Less than 2 years ago, FTX was collapsing in a historic fraud, Matt noted in his memo. Bitcoin was trading at $17,000, and skeptics were dancing on crypto's grave. Now politicians are openly talking about building a Bitcoin Fort Knox. Of course, it's easy to look at Washington's embrace of crypto as shameless opportunism, but I'm not sure that matters. When you say opportunism, I say, that's how politics works. Politicians are embracing crypto because Americans are embracing crypto. Regardless of the motivation for the growing approval of Bitcoin and crypto in Washington, Matt believes all these new developments are super bullish for Bitcoin. He urges that instead of crypto investors focusing on downside risks, we should be reevaluating the scale of Bitcoin's potential near-term upside. He wrote, "Could we wake up tomorrow and find out that a G20 country has added Bitcoin to its balance sheet, looking to front-run the US? Could comprehensive crypto legislation get passed more quickly than expected in the US as bipartisan support strengthens? Could Wall Street massively embrace crypto at a scale much larger than most expect? These ideas would have been the stuff of daydreams a year ago. But after what I witnessed last week, they look more likely than not. If the 2024 Bitcoin conference conveyed anything, it was this. It's time to rethink what's possible for Bitcoin." Let's get back to the fireside chat.
We've been educating this audience for 7 years, right? We do 20,000 meetings with financial professionals each year about Bitcoin and crypto. They ask two types of questions. One is due diligence on the products. How does custody work? How does trading work? And they just need to walk through that. That's not different from any ETF. You would need to do that with any ETF. And the other are sort of more fundamental questions about Bitcoin. Where does it fit in a portfolio? Importantly, how do you value it? Why does it have value? They still have those fundamental questions, but I will say they've changed over the last 5 or 7 or even 3 years. They used to have more fundamental questions. Will Bitcoin still exist? Those have vanished from the ecosystem. They used to get held up on custody and how it works. Those are much easier to answer now. So the questions are getting better. The due diligence is getting quicker, but it still takes, 6 months, 12 months, even more.
What bothers or disturbs me a little bit, in sort of communicating with clients about financial investments, you have to explain the opportunities and the risks. So actually what concerns me a little bit is the questions that investors don't ask. I mean, they just don't understand sometimes, what the network is. Is network usage growing? And that's true for, the other ETFs that launched last week as well. They talk about the price, they talk about volatility, they talk about security, but they don't understand a network without users has no value, right? It has no interest. So I know you talk about it, Matt. I'm just trying to highlight, sometimes you have to prompt them to ask the right questions about these kinds of investments. I know you talk about it as well, Robert.
Yeah. And I think there is one theme in particular in our education journey with clients that's coming up more significantly now. And that is how to think about Bitcoin from a risk perspective. Because Bitcoin on a standalone basis certainly is a risky asset. It's an early emerging technology. Its adoption trajectory is still somewhat uncertain. There's regulatory uncertainty, et cetera. But when you think about it in the context of a portfolio at a modest allocation, then that conversation can actually turn on its head. Because other than exposure to interest rates, there's a fundamental basis on which Bitcoin you would expect to be either uncorrelated or in some cases inversely correlated to some of the risks that investors face in their portfolio. So you're starting to see that light switch go on a little bit of, this may be a flight to safety in the face of debt and deficit accumulation, currency debasement, inflation, geopolitical disorder, all these types of other risks, right? And so that is the really important journey that a lot of our institutional and advisory clients are on.
The way I look about Bitcoin is it's sort of like evolving and growing up, right? So maybe it's a teenager now. It's not fully formed because so many investor classes haven't really joined. I think the toughest allocation question I have, and I know a lot of individuals think about this as well, is why should I be selling Bitcoin? If I believe the Super Bull case, why am I constantly selling into this bull market? I mean, we just came out with research that talked about a price close to $3 million a coin in the scenario where it's adopted as a reserve asset globally. Now, that's very speculative, and that would be extreme adoption. But that's where professional investors like us in our day jobs say, oh no, you've got to do mean variance optimization, you can't hold too much. And everyone I meet at Bitcoin conferences owns way more in their own portfolio. And I always say, wait a minute, I always want to tell people what I'm doing personally because they should know, right?
But what are you doing personally?
I'm like way over 30%.
Jan VanEck is as bullish as, if not more bullish than, Matt Hougan. In a recent interview with Fox Business, the VanEck CEO predicted that Bitcoin could hit a new all-time high of $350,000 as soon as central banks start cutting rates and resume quantitative easing in the coming months. He said, eventually the Fed will start easing, and that's great for gold and Bitcoin. Bitcoin is growing up. It would eventually be half the total market cap of gold. So that's $350,000. According to the entrepreneur and innovator, we could also see a Super Bowl scenario where multiple major central banks adopt Bitcoin as a reserve asset. If that happens, VanEck predicts Bitcoin could skyrocket to $2.9 million. This aligns with his firm's recent research report, which gives a staggering $2.9 million base case prediction for Bitcoin by 2050. According to the writers of the report, Matthew Siegel, the head of digital assets, and Patrick Bush, a senior investment analyst, Bitcoin's adoption as a global medium of exchange and a reserve asset would revolutionize the entire global financial system and spur Bitcoin to crazy new highs. Do you agree with VanEck's projections for Bitcoin by 2045? Especially as they are quite similar to Michael Saylor's $3 million price prediction for Bitcoin? Please share your comments and observations in the comments section below. Also, please like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.